it really is about close reading of the rules and then practice. It rarely sticks, just the first time around. So, don't feel bad if you feel like you got it, and then when you're doing a question, suddenly it feels like you don't have it. That's totally normal, because it takes, a close reading of the material, first of all, to try and understand the rules, and then secondly, a lot of practice. But this is also why it's important, to be on these calls for those who can make it, or to watch it after the fact, because you also need the explanation. That's the other piece. You do need the explanation.
Is that I totally understand, because when I was trying to read everything by myself, I kind of get the gist of it, but when I was doing it, it became like in shambles. So
Yeah, and I mean, it's possible for it to be a shambles. Like when you are changing from, being in a class to basically like learning stuff on your own. It's a big adjustment. It's a big adjustment, and accounting can be done. Like, I mean, I have online classes, so people are doing it by themselves, but it takes some extra hours to do that. It's not easy.
the the um the partial statement.
You mean the balance sheet?
Yeah. Like
Yeah.
I got some of it right off reading it off the textbook, but then things that the rest I didn't. I tried to follow the order, but then
Yeah, from what I recall with Wiley in the creation of the balance sheet, the partial balance sheet versus the textbook, I recall that Wiley is I'll give you an example. Like, for instance, in the textbook, and we'll talk about this later also, or next time, when you're making the balance sheet, you actually, like, let's say for preferred stock, you actually give like the what do you call it, like the features of the stock, like 8% to, $100 par value, whatever, preferred stock. But then when you're doing the work, in the homework, sometimes Wiley doesn't take doesn't require all that detail. So let me just see if I'm just going to share. I am recording this, so anyone who's not here yet will be able to see what we're talking about later. But let me just see if I can go into the assignment and kind of show you what I mean. So 1311, right? So so you see, some people had problems in the past, in some of my past classes, where they tried to put, more information, like as we normally would, like putting the stated value of the stock or whatever into this box. And Wiley just wants the name of the stock. Like, it doesn't want any of this, like 8% $100 par or the $4 stated value. And so that sometimes trip people up. I don't know if that was maybe one of the things. The other thing I'll say is there's a very specific way to write this out. Like, stockholders' equity is the main heading. Then you've got paid in capital as a subheading, and then capital stock is one part of paid in capital, and additional paid in capital is the other part. So so there's a few quirks here in terms of how the computer system takes it versus what the book shows. If I show you what the book has, and I don't know why they did that. I suspect it's got to do with what the algorithm can recognize. Let me show you here. So if you look at the balance sheet, right, from the textbook, so it's got stockholders' equity, it's got paid in capital, it's got capital stock, but you see how they write so much extra information right, for the preferred stock and for the common stock. So in the solution, you only put the name. You don't have to put all these other features of the stock.
Yeah. That's another reason why when I read it, it's like I have extra information that makes me stir somewhere else.
Yeah. I mean, this looks really involved. And when we go through this stuff, I'll tell you guys exactly what it means. I mean, this is important, especially the stuff to do with the preferred stock is important because when we work in chapter 14, we're going to deal with dividends and things like that. And the dividend for the preferred stock is dependent on this percentage and the par value. And I mean, at the moment, most people don't even know, won't necessarily even know what par value means. And so all of those things I'll be going through systematically so that, you guys, by the end of this, you would know what this means and when it really needs to be used and when it's just for informational purposes. Right. So you kind of need guidance. I mean, the book does give it, but when you're reading the book, you kind of have to be really engaged and like almost take notes or something, because there's a lot in this chapter. I think the danger of this chapter, and I've always said this when I teach it, is that there are a lot of like small bits of information and small like subtopics and things that one has to know how to do and understand, and so it makes the chapter, like I always said, in partnerships there were these 4 things that we needed to know. Those are the 4 things and we're kind of done. But yeah, there's a lot of little niggly things that you kind of have to keep in mind as you do the work, because you could end up getting really confused. So I totally get it. And that's why, we'll go slowly, step by step, to make sure that everybody's is together on this. But please understand that, I get it. There's a lot to take in this chapter. So it takes a lot of practice, and some people are not sometimes willing to put the time in. I mean, I know we're in extreme circumstances now, but you have to put the time in, because historically, unfortunately, this chapter and probably chapter 17 have been the most difficult and sometimes the worst performances for people on the test, because they underestimate the amount of time they should be spending to actually study chapter 13.
Can anyone hear me?
Yes, we hear you.
We can hear you. So I don't mean to scare you, Jeremy. I'm just being, we're just being real and saying that it is not the easiest chapter, and but with obviously my explanation, us working together through problems and stuff, and then you guys practicing on your own, it's totally doable. It's just that there's a lot of information to deal with.
There is no shortcuts, right? Because usually there's some shortcuts that you can remember things easier.
I mean, in my notes, which hopefully everybody pulled down from the Zoom call materials thing, I'll as we go through, I'll tell you. I mean, I don't know if I would call it necessarily shortcuts, but maybe like rules, like this is always the case, when you do this with, common stock, then this is how you treat it or whatever. There are certain rules that are going to help you to not to have to think through the thing every time. But I wouldn't call those shortcuts. I just say that, you have to remember these rules. And if you remember them, it's going to make life like exponentially easier when you do these questions.
On Wiley Plus, it says chapter 13 is due March 30th. Is that the correct date, or?
No, I've changed all the dates last night, which I'll go over at the top of the call. But I have to go into Wiley today, because I changed the stuff late last night when I was just trying to run through our dates. So I'm gonna give you guys new dates. Everything shifted. So don't worry, by the end of today, even the Wiley Plus dates and everything will be updated. And if you're curious about how the dates are changing, you can go into Blackboard now. If you go into tab I call due dates and assignments, you'll see that the homework for chapter 13 is only due on April the 6th now. Okay, so I've shifted everything back, like I said I would yesterday. But I haven't this was happening at like 11 p.m. or something last night. So I haven't updated Wiley yet because I was, well, pretty tired at that point. So I didn't want to make mistakes. But by today, all the dates in Wiley will shift as well. All right?
Okay, all right, thank you.
No problem. Other questions that people have before we get going here?
Miss, I have a question.
Yeah.
So spring break, is it April 8 to 16 or April 8 to 10?
Okay, so I also wanted to address that. Thank you for bringing that up, because there was this notice that went out yesterday, and let me actually just go to the CUNY official website. If anybody gets CUNY alerts, you might have gotten a bit of a shock yesterday. I went almost crazy because I'm like, what are these people talking about? So basically,
8 to 10.
Yeah, so basically yesterday, for those who don't know what's going on, the chancellor sent out like an email, and CUNY also sent a note to say that because I guess some schools are having a lot of problems with, I don't know if it's with faculty and with students having what they need and things of that nature, that they were going to put some of the teaching on hold, and that they were going to cut spring break and so on. But this is related to schools unlike ours. Remember, the other schools have 15-week semesters, and they already started in January, and I think many people were already at the point of doing midterms and things like that, and probably faculty and students were struggling to be able to do any of those things with people not having the proper equipment. So this, as they call it, a recalibration period, does apply to some of the students, but it doesn't apply, I mean not the students, excuse me, some of the colleges, but it doesn't apply to us, because we had basically just started our semester when all of this went down. So we have a little bit more time left in our semester to be able to, shift things around and so on. So LaGuardia, Gutman, Kingsborough Community College, and a few other, places that are not really relevant to us are exempt from this change. So I would be meeting with you as planned, as per normal, and the spring break not that we're going anywhere for spring break, but nevertheless, just to, if anybody's confused about it, you can always go on the LaGuardia website, you go to the academic calendar, and then over here you'll see that spring break is still from April the 8th, which means meet on April the 8th. The last day we will meet together is April the 6th, Monday, and then it ends on Thursday, so I would only see you again the following Monday.
So that means that we still have the online classes for spring break, as usual.
Which, you mean your current classes, like this one?
Yeah, like every class that we have.
No, spring break is spring break, unless for some reason your professor in one of your courses is, I don't know, in conjunction with students, made some agreement that they were going to meet in spring break for something like.
Oh, so wait, spring.
Like
so that means that April 8 to the 10, we don't have classes online. April 8, 9, 10.
8 to the 16th. Are you seeing what I'm showing you here? April 8 to the 16th.
Yeah, because I have a younger sister who goes to your college, and we spoke about it, and I told her 8 to 16, and she said the email says 8 to 10.
Sorry, did you say York College?
Yeah, my sister goes to your college.
York College is affected. York College would only be April 8th to 10th because York College,
that's what I'm telling her. I'm like, I told her we're April 8 to 16.
Yeah, but your sister, if she's going to York from this Friday until Wednesday next week, they're not going to have classes.
Uh-huh.
So it's a whole different setup. So focusing on us, you are going to have classes. I would still see you on April the 1st, all of that. Everything is as is. But your sister and them and anybody else who's at a 4-year school, or if some of you are taking classes at a 4-year school and at LaGuardia, or you have family members, just like you're saying, you have a family member who's at a different school, they may be impacted. So go to cuny.edu if there's someone in the family who's at another school, and you can check through there. It's really LaGuardia, Gutman, Kingsborough Community College, and then some of the graduate programs that are exempt from this whole thing. Everybody else is in the thing because they're the people who started at the end of January. They have a 15-week semester. They were already deep into their semester when this happened. So I think they're finding it a little bit more difficult to kind of calibrate themselves to the new reality, especially because at this time of the semester, they would obviously normally be doing midterms and things would be due and so on if they already started in January. All right.
Okay, so that means before April 8 and after April 16, that means then we have distance learning.
Yeah. So if
Okay.
you look at this calendar sorry, I've gone too far. So if you look at my calendar over here, today, right? I'll still see you on the 30th. Everybody will see everybody on the 30th. We'll see each other on the 1st. We'll see each other on the 6th. Then on the 8th is when spring break starts. It ends on the 16th.
On the 16th,
You have a class on a Friday. You would meet on the Friday. You would meet on the Saturday, Sunday if you have classes. We will see each other again on the 20th. And you know me, I will send a million emails to remind you guys anyway. Did I just kill my entire, I just by accident killed my whole thing. Yeah, let me try and go back. Any other questions while I try to recover all my tabs? Anybody else about an administrative issue or anything like that? Okay, so I'm just going to go back into the drive to pull up the documents for our class, and then what I'll do is just walk us all through the place where you can see the dates, how our dates have changed based on, our new timing. All right, so I have most of what I need. So just going to go back here again, due dates and assignments on the Blackboard. You can even probably see it on your own screen. As you know, and this has been said many times, the homework for chapter 12 is due this evening at 11:59 p.m. It's, all those questions that we've been talking about at length. And if someone still has questions about that, maybe you can ask me at the end. So that's due this evening, 11:59 p.m. That counts 5% of your grade. Everything else has shifted, okay? I know that on Wiley it still has old dates. I'll fix those dates. But your Chapter 13 homework will be due just before we go on spring break. Then obviously we're off for spring break, so I can't, I'm not teaching you anything. So when we come back, we have to be working on Chapter 14. And so that homework is only going to be due on April the 27th. And then at that point, we'll have a quiz and a test for Chapter 13 and 14. These things I would make available, before the time, obviously, but the due date will be May the 3rd. So that would be a timed quiz and a timed test. And then, from there, again, the dates are just shifting back. So Chapter 15 homework shifts to May the 13th, 17 homework to May the 25th, quiz 2 and test 2 are going to only be due on May the 31st, and then the Chapter 18, which is the last chapter homework, will be due on June the 4th, which is the last day of classes. And then we will, instead of having the final exam, we were going to have it on June the 8th. I've shifted it by 2 days so you can have a little bit more time to study, and I can also meet with you guys on the 8th if need be, if people have questions and things like that. It will be due on June the 10th. I normally release the exam, like I make it available, you know, a few days, like a week or something before it's due. But I would say, you know, don't just attempt the exam before you've actually studied sufficiently. I'm just making it available for those who feel confident that they're ready to do it. So it's not going to be available on June 10th for June 10th. It would probably already be available from the 3rd of June, and you would have until the 10th to finish it. Questions about these dates, anybody?
Miss, I have a question.
Yeah.
For the tests, quizzes, and for the homeworks. For the homeworks, basically online for the questions, right?
Yeah.
We will have multiple attempts, correct?
Yeah, you have multiple attempts on the homework. So
Okay.
let's go into the homeworks. Let's say for chapter.
But just like chapter 13, honestly, I feel like the unlimited attempts were very helpful. I'm not gonna lie.
Yeah, so you've got 100% point potential.
Yeah.
5 attempts.
Okay.
And after the 5th attempt, where I think people would then start getting aggravated, I do allow you to showing the solution. You don't have to show the solution. It's not like it pops up automatically. The system will ask you if you want to see the solution. And at that point, you will lose some points if you want to go into that. But you can also show answer, meaning you can see a calculation after the 5th attempt, and you would still be able to get 100% on the homework. All right, so you have at least 5 attempts before the system will even prompt you to ask you if you want to show the solution. I didn't make it completely unlimited because at some point I also just want to make sure that people are actually reading the text and not just trying anything. You know, at this stage, I think it's reasonable that by the 5th attempt, if you find out that something that you got wrong was because of a system error or something like that, you could easily contact me and I'll just fix your grade to be 100%.
So, hi, Professor. So my question is, so there on every assignment, there's a related video. So is it okay if we watch that before doing our assignment? Because it's hard to that. Yeah,
so are you referring to related videos as created by Wiley? Am I understanding you correctly? Yeah. So in the, let me see if let me go to the student view, sorry. So we're 29, okay. So over here, you know, it says that we have 12 assignments. Yeah, I put reading and review, where I tried to assign things that might be helpful to you. You can choose to do some or all of this. You should absolutely be reading the material. Sometimes there's a video, just like you said, where the video is basically walking you through a problem. Definitely. If you look at, you know, if you look at this video is basically going to walk you through this entire problem. And I mean, that's really helpful. So not only is it, you know, okay for you to do it, I would encourage you to look at those things before attempting the homework and to read as well, because you will save yourself, I think, a great amount of time if you actually use some of those resources instead of kind of just trying to lean on, you know, either your own reading or just what you heard me saying in the class.
Thank you so much, Professor.
You're welcome.
It's helpful.
Other questions, guys? Maybe I'll just say something. I do know that this day is Memorial Day, obviously. I'm not saying that you should stay. I mean, Lord knows we may also be inside on May the 25th, but I'm not saying that that's the day that you have to sit there when all your family members may be home or whatever and do this work. This just means that this homework is available now already. It's just that the last day to submit is May the 25th, okay? So when you go into Wiley And again, I am aware that the dates are going to be off and I'll fix them. But when you go into Wiley under the student view, you'll see that all of these homeworks are already available to you. And so you don't have to wait until the day when they are due to start them, because they'll all be there already. And in fact, I would always encourage you to start them sooner so that you can ask me questions either via email or during the class. Okay, so if there aren't any other major points that someone needs to make, I'll start with the class. Sorry, let me just get some water. I don't know why my throat is already dry. So in chapter 13, and for those of you who have already looked at this chapter, you know we're dealing with corporations. So we've moved away from the world of partnerships, and we're going into talking about companies now. And not only just what are companies, but how do you start a company? What are the features of companies, and how do companies raise money? So obviously here you can see Mark Zuckerberg from Facebook, and the feature story is talking a little bit about Facebook and Google and Microsoft and so on. And so we'll discuss how do you form a company. If you're a stockholder or a shareholder, basically means the same thing. What are the shareholders' rights in the company? What does a balance sheet look like for a company now versus a partnership and a sole proprietorship? We'll also discuss the fact that there are different types of stock that companies have. Does anybody want to take a guess as to what we mean when we say the word stock?
The shares in the company?
Yeah, and what does that mean? Like if you say you have a share in the company, what are you at that point, or what does it mean for you?
Stockholder.
Yeah, and
That you
so
basically
You
own the company, but you don't
you
run
own
it.
part of the company.
you own a piece, exactly. So you own some portion of that company. So if you go out today, so since we had Facebook as the opener, so let's say Facebook stock, right? So you could go out today if you wanted to, and you could buy one stock in Facebook. It's going to cost you $156.09. If you had bought it 5 years ago, you would have paid roughly half of that, right? So you could have doubled your money in 5 years. So this buying one of these, you'd have to fork over $156.14. That would mean that you own a small piece of the company. And the issuing of stock that we'll be discussing in this chapter is how the companies raise money in order to conduct their business. There's issuing stock, and there's also issuing debt, right? So issuing stock means we are giving them, especially when you may have heard these words, or those letters, IPO. A company could have an initial public offering. So they offer shares to the public. The public buys those shares, we give them money, and then we have a small ownership in that company. And at that point, whatever we invested, we're obviously hoping, to make some money. At the moment, I mean, the market is obviously extremely volatile because of where we're at with the pandemic, but you're hoping to make some money and maybe to be paid something called dividends. Any guesses as to what a dividend is? Dividend.
The money that's
Paying
left.
the owners?
There's money I think I heard someone saying money that's being paid to the owners. Sorry, I keep forgetting. For the people who are contacting me via chat, I'm sorry, I keep forgetting to open the chat window so that I can attend to you. Yeah, so and someone is asking, I think Tiffany, you asked if the first test is on 12, 13, and 14. Yeah, and thank you, Daya. No, it's just 13 and 14, so you're good. Okay, yeah, so a dividend is exactly that. It's a piece of the profit that is paid to the owners. Remember when we had drawings, when the owner takes money out of the company, or drawings when the partners take money out of the company? So a dividend is like that, like the drawings, except that with a company, we can't just go, so I own some stock in Facebook, very little, but I can't just go up to Zuckerberg and say, hey, I want to withdraw some money. I have to wait for the board of directors of Facebook to say that they are going to pay a dividend. And at that point, I will get some tiny amount of money that is based on how many shares I own from them. So I think I bought the stock of Facebook like 2 or more years ago. So let's just say, for argument's sake, I can't even remember. I know I bought it for somewhere around $100. So I've maybe made $55 in profits, but I haven't received any dividends because Facebook hasn't paid any dividends. So this is the stock. When we say you own a share or you own a stock, it means that you own a piece of the company. And for those who, we'll talk a little bit about Amazon also. I'm sure the Amazon stock is pretty expensive. Just to buy one share, you would have to have about $2,000. It was much higher before, but there were all kinds of things that happened with Amazon. Does anybody know does someone want to guess what one of the most expensive stocks may be? Sorry, my daughter's crying in the background, so just ignore her. An expensive stock. Anybody want to say a name that you think might
Microsoft?
be? Okay, maybe Microsoft is actually not that expensive compared to, you see, they're even less than Facebook. Anybody else
Amazon?
want to throw? Yeah, so Amazon is $1,900, pretty expensive. Anything else that you want me to type in here? We can check. Sorry, I didn't hear that.
Walmart.
Walmart, maybe a little bit, but not to 110.
Uber, maybe?
Who?
Uber?
Oh, Uber went to, no. Did you see? Uber had this big thing because they were going to have an IPO and they were going to make so much money. And then after they listed, the stock price just tanked. Why do you think the stock price of Uber went down so much? I'm not just talking about Corona. I'm just talking in general. Does anybody want to guess? They started out at $40-something and they were down to $25, $26 even before Corona hit.
Because other ones start popping up like Lyft and stuff like that. Lyft.
Yeah, but I mean, Lyft is also public, and Lyft was actually struggling a little bit more. Anything else?
Maybe
Lyft
bad reputation.
Maybe what?
Bad reputation.
Yeah, a lot of it was that. It was very poor corporate governance, a lot of ethical issues. People, were having all kinds of incidents in the cars, and Uber wasn't really dealing with it very well. So the last thing I'll show you, I just wanted to show you one of the most expensive stocks that exists, Berkshire Hathaway Class A stock. How much for one share? You got that money lying around?
No, I never heard of Berkshire Hathaway. What is that?
Does anybody know who owns this company, Berkshire Hathaway?
Warren Buffett.
Correct. That's Warren Buffett's company, and he refuses to split his stocks. He's like, if you want to invest in the company, this is what you're paying for one share. So you can maybe buy a studio apartment in New York for the cost of just one share of Berkshire Hathaway. So yeah, so Warren Buffett, who is very well respected in the financial world, he's the owner of this company, Berkshire Hathaway. All right, so why did we do that? What are we talking about? We're saying that in this chapter, we're going to be learning about companies that are issuing stocks in order to raise money, that they might use something called common stock, they might use something called preferred stock, or they might buy back their stock from investors, at which point we refer to that as treasury stock. Pardon me. So to start out, we will just talk a little bit about how companies are formed. And let me just get to, sorry, I didn't mean to do that. I'll go back. Oh, being too quick, my bad. It's just this thing is the stop shares right there where I'm trying to click. Okay, so I'm in the notes. For those of you who maybe still don't know where the notes are, they are on the Zoom call materials on Blackboard. So this is just kind of my rough summary of what the chapter says. So for a company, just to understand how the companies differ from partnerships and sole proprietorships, they do have what we said, stocks or shares. So when you used to talk about the owner invests in the company, now it will be, you know, that we buy shares in the company or we buy stocks in the company. Some of the characteristics, right? They're a separate legal entity. So when you think about Amazon, you might think about Jeff Bezos, but Bezos is the CEO of Amazon, but he is not Amazon in the sense that Amazon is still its own entity, meaning that if I decided today that, you know, Amazon did something to me that I didn't like or whatever, I could sue. The easiest way to think of something as being a separate entity is that you can sue that entity. So I can bring a lawsuit against Amazon that doesn't necessarily involve Jeff Bezos, right? So a company is distinct from its owners. Similarly, I was saying I own stock in Facebook. If Facebook goes to, you know, Washington to defend themselves, or there's lawsuits being brought against Facebook, that's got nothing to do with me. Even though I own some of the stocks, it's not going to impact my life in any way unless the company gets into such a bad situation that the stock price kind of tanks, then obviously I lose money. The company can be public, meaning that the stocks are traded on an exchange like a New York Stock Exchange or NASDAQ. It can also be private. So some of you might even have family members or yourself where you have a corporation, maybe an LLC, limited liability corporation, but I can't buy stocks in your or invest in your company because it's private, right? It's not available to, the stocks are not available to be purchased on the stock exchange. You can be doing it for profit. So, you know, as with most companies, it's for profit, but also not for profit, right? So sometimes there are charities that are formed as corporations, but their goal is not to make a profit. Their goal is something else, you know, to provide some type of service or, you know, to help people out. So since the company is a separate legal entity, it pays the state and federal taxes itself, separate from the owners. And so when you look at the financial statements, and I'm just bringing up Amazon here quickly, I just want to show you. So this is the statement of operations, just means income statement. I know it looks all crazy, like there's a lot going on, but you see here where it says provision for income taxes, that's the tax that the company is paying, right? The corporation is paying itself. So remember when we were dealing with sole proprietorships and we were dealing with partnerships, we never had to be concerned with tax because those are considered what we call flow-through entities. The income flows through from the entity to the owner, and the owner pays the tax. Whereas with a corporation, the corporation has to pay state and federal and local or whatever taxes on their profits. So the last financials that I found for Amazon was from 2018 because the 2019 financials haven't been released yet. But, you know, just as an aside here, you can see these numbers are in millions, right? And so in 2018, they made 141,915 in product sales. So what is this number? How much is this actually? Anybody? 141,915 million. How much is that?
6 more zeros?
Yeah, and then how do you say that?
I don't know.
141.9 billion. Okay, so if you look at their revenue, this is from when they sell products. The 90 billion is from when they do Amazon Web Services, so that's the cloud services. In the end, in 2018, they made $232 billion in sales, which then translated into, sorry, this thing is blocking me here. Let me see, 10 billion in net income, right? 10 billion in net income. How much tax did they pay? This is the tax number. How much is that? Yeah, 1.1 billion, right? So it's interesting, if you had to run that percentage, their income before taxes is 11 billion, and they're only paying 1.1 billion in taxes. Some of these companies have a lower tax rate than us individuals. So the company pays tax, and we already said it could be for profit, not for profit, so separate legal entity, right? For these types of points, like I said before, this is more things geared towards a multiple choice question or something like that. I'm not going to ask you in a test to write out, what are the 6 characteristics of a corporation, so don't panic. But you do need to know this because it impacts how we account for things. Like when we make an income statement now for a company, we will have to deal with taxes, whereas before we didn't have to. Limited liability of stockholders. You can't, when you invest in a company, you're not responsible for the company's debt. So, again, if I have 10 shares in Facebook, if Facebook has, a whole lot of debt on its books, that's got nothing to do with me. No one's going to come knocking on my door to say, hey, Facebook hasn't paid us, you better pay up. Whereas with a sole proprietorship, obviously, if the company has debt and they can't pay it, then they could actually look to the owner's assets to be able to pay off the company's debt. So the next thing is that ownership rights are transferable. So what does that mean? Facebook had the initial public offering years ago where they first offered shares to the public. Now the shares are out there, they're being bought and sold all the time, which means that people can be buying and selling ownership without ever having to consult the company itself, right? So that's what the market is about. We're buying and selling stocks between each other, and so the ownership can be transferred. And when I buy a stock in Amazon or I buy a stock in Facebook, at this time, Amazon doesn't have to account for my purchase, right? And Facebook doesn't have to account for my purchase because that's between me and whoever I bought the stock from. It's between individuals. This is very different from partnerships, because with a partnership, if someone wants to leave the partnership, the whole partnership has to liquidate. You can't just transfer your ownership from one person to the next. So again, I'll just, to be clear, when someone buys a stock in Berkshire Hathaway, Warren Buffett's accountants don't have to do anything in the journal entries because that would be in the secondary market. It's got nothing to do with, an initial public offering. Any questions up to here? All right. So ability to acquire capital, companies can raise money through selling shares, or they can raise money through issuing debt. In Chapter 15, we'll see more about liabilities when companies borrow. So you can raise money. The entity itself can raise money, can acquire capital through selling shares. So, Facebook could decide, tomorrow that they need more money, and they could go into the market and issue another round of shares if they want to. Those are the types of things that are possible when you have the corporate form of business. the other piece here is that the company has a continuous life, which means that, you know, if you think about Apple, it doesn't matter. I mean, obviously, from a personal perspective, it was tragic that Steve Jobs passed on. However, Apple itself doesn't stop. It didn't stop, you know, when he was gone. The company continues because the continuation of the company is not tied to someone, you know, someone's personal circumstances. It's a separate form of business. It's a separate entity. So, you know, if Bezos decides to step away from Amazon, or the other day Bill Gates said he's stepping away from Microsoft, Microsoft doesn't end at that point, because it is the company has a charter or a formation document, and its life can go on forever, even if the original people who created it are no longer around. It's very different from a sole proprietorship that's dependent on an individual, or a partnership where if one of the partners wants to leave the partnership, or, you know, unfortunately dies or something like that, the whole partnership has to liquidate. And so how is, you know, company managed? Again, you know, it's stockholders own the company, but, you know, me with my 10 shares, or even if I had, you know, 100,000 shares of Facebook, doesn't mean that I can go into their offices and just start calling the shots, okay? A stockholder owns the company, but stockholders vote to appoint a board of directors. So the board of directors are the people who make, you know, the decisions, and the stockholders appointed them. So it's almost, you're assuming that the board of directors are going to do what's in the best interest of the stockholders. So I don't need to fly to California to Facebook's offices and try and get stuff done. The board of directors are working on my behalf. And then yeah, go ahead.
Well, basically the stockholders is just the supporters, and then all the directors that they appointed will be doing all the legwork.
Yeah, because the setup is such that it would be, you know, total chaos if all the stockholders had to try to weigh in on how the company would be run, because there are just so many people all over the world and so on. So yes, so once a year at the annual general meeting of a company, there's voting that happens. And I mean, whether you get to vote and all of that will also depend on the size of your investment in the company. But once a year you vote, and then you vote to appoint a board of directors with the assumption that the board of directors are going to act in the best interest of the stockholders. That isn't always the case, obviously, as we know from many corporate scandals and so on, but that's certainly the hope, that those who are being appointed understand, you know, what the priorities of the stockholders are. So yes, they're there making day-to-day decisions. The stockholders are, you know, doing their own thing and just reviewing the decisions, because most of the time the company will send out press releases, or they'll do earnings calls and things like that, where the stockholders can hear how things are going. The CEO is, you know, the main person that has overall responsibility for the company. So for a Facebook, it would be, you know, Zuckerberg. For Apple, you're talking about Tim Cook, etc., etc. So the CEO is going to be answering for whatever is going on with the company, and is also part of the board of directors. And then you may have something like a chief accounting officer or controller, people like that, who are doing some of the accounting. I'm not sure that this page number, because we don't have page numbers in the electronic book. I'll see if I can find what I was referring to over here. Yeah, so this is kind of the, right, so there's the stockholders, which would be us if we're buying stocks. There's the board of directors and the president and CEO. Then there's all these other people, vice presidents of all the different operating areas of the company. And if you decide to, you know, if you major in accounting, you may end up being the controller, which is kind of the main accountant of some of these companies. And then regulations, yes, you know, the government does regulate companies. The Securities and Exchange Commission is, also tasked with looking at the financial statements of companies to make sure that they're not misleading anybody and that they are disclosing what they're supposed to be disclosing. So there's a lot of rules and regulations that companies have to follow. And, for the protection, again, of the stockholders, remember, the stockholders are not there on a day-to-day basis to fight for their own rights or whatever. So, we're hoping that the board of directors act right. If they don't, then there's still some overall regulation with the Securities and Exchange Commission and I guess the federal government as a whole. So you sometimes hear about the SEC in the news, where there's some type of illegal activities and things going on where the SEC has to step in. Unfortunately, over the years, there have been many accounting scandals and many companies implicated in all kinds of wrongdoing. So sometimes the SEC is not as on top of things as they should be. And then I guess the last piece, which nobody likes, is that companies are also subject to this concept of called double taxation. So already that sounds bad, right? So double taxation means that the company is paying state and federal taxes. So if we go back to Amazon, remember in 2018, Amazon is paying 1.1 billion, right, in taxes, and then when or if they pay a dividend, the stockholders will also pay tax on that dividend. Remember, we said a dividend is a piece of the profit that the company distributes. So it turns out that that the same money gets taxed twice because the company pays tax on it, and then when you as a stockholder or shareholder get your piece of the money, you will have to pay tax on it again.
Just the amount you received, though, right?
Yeah. I mean, I can't pay 1.1 billion. So only on what you receive, and it will also be dependent on your personal, income tax rate and things like that. How much tax you pay. But I guess what's frustrating for investors and in general is that the money was already taxed. So it's like the government is double dipping at that point. But yes, you're only paying tax on the piece that you receive. A lot of companies that, some of these more popular companies that people invest in, like they call the FANG stocks, like your Facebook, Apple, Netflix, Google, and so on, they don't really pay dividends. Apple does now, but, in the past they didn't pay dividends because they claim that they want to reinvest all their cash in the business to keep building the business. So if you look at Amazon's financials, let's see how much cash they had on hand in 2018. You see that? How much is that? Now that we know how to read these financials, how much is this?
31,750 million.
$31.7 billion in cash, right? So tell me, if you have $31.7 billion, maybe some of that money could be sent back to investors, right, as a dividend. But they always claim that they need the money. They need to hold on to the money to build the business further. So Apple was pulling these same kinds of stunts a few years back, and eventually the stockholders, again, who are the owners of the company, got so mad that they basically said, look, you better pay us a dividend or otherwise there's going to be, some type of mass rebellion. And so in the end, Apple started paying a dividend, which people were pretty happy about because, I think as an investor, you're like, I could be, I could be doing something with that money. You're just keeping it there for better days, right? So these are the types of tensions that exist in the corporate form of business. Does anybody have any other questions about the characteristics of a corporation?
I think a corporation, you could also have more than one.
More than one what, sorry?
Like a chain.
Yeah, I mean, absolutely. So, you know, but that doesn't, so you have to be careful here. So yeah, of course, like a Walmart, for instance, you could have multiple stores, but everything still flows into the holding company, you know? So definitely, I mean, Apple has multiple stores and all kinds of stuff that's happening all over the world. But if you had to look at Apple's financials, what you're looking at is going to be the sum of everything that's happening everywhere else. Does that make sense?
Yes.
Okay. All right. So now let's talk a little bit very briefly, because this isn't as important. I mean, we're not trying to form a company right now, but, and I know this is a little bit dry, guys, because I'm, you know, at the start of the chapter, I have to go through some of this theory, but we will get to some of the good stuff, you know, good stuff according to me. May not necessarily be good stuff for everybody. So to form a corporation, you basically have to work with the state. You know, apply to get a charter or some type of document that shows that the corporation exists. If you're going to issue stocks and things of that nature, you actually have to say what the number of shares of stock are that your corporation, okay, that your corporation will be allowed. Authorized means what are you allowed to issue, right? And issue means to sell. So if I was starting a company today, I might, you know, say that I would like to be able to sell 1 million shares. That would be what I am authorized or allowed to sell. And then I can issue, which means actually sell all of those shares or some part of those shares. It's up to the company, it's up to the board of directors to decide. So these are important pieces of terminology because they come up time and time again in our work, authorized and issued. Again, authorized means how many shares are we allowed to sell. Issued means how many shares did we actually sell to the public. So if we look at Amazon's balance sheet, yeah, under liabilities and stockholders' equity, under stockholders' equity, so if you look at their preferred stock, which is one type of stock that they have, they are authorized to sell not 500, but 500 million, right? Remember, the stuff is in millions. So they're authorized to sell 500 million shares. Issued and outstanding means what did you actually sell and what's still out there? None. So at this time, Amazon has not issued, meaning they have not sold any preferred stock. For the common stock, right, which they have actually sold some of them, they were authorized to sell not 5,000, but because it's in millions, 5 billion, right? Shares is what they're authorized to sell. And then over here, they tell us what is issued, meaning what was actually sold, and what is outstanding is a little bit different. And I'll explain to you later why that's the case. So again, the terminology of authorized and issued is important because it's telling you what are we allowed to sell and what did we actually sell. And you know, the corporation also has rules, its own rules that it needs to follow, called bylaws. There may also be organizational costs when you start. I mean, if you start a company, you probably may need to speak to a lawyer. You also have to pay the state some amount of money to actually get the company registered. Things of that nature all form part of organization costs, and all of those are expensed. Okay, so that's forming the corporation. And so now for the types of stock, you just see if I can show you. Well, we'll come back to this because I have to probably just talk a little bit more before. So ownership rights of the stockholders, right? A company can have one class means type, so one type of stock, right? And if they have only that one type of stock is called common stock. So you saw it over here. Amazon has common stock, but they also have another type of stock called preferred, right? Preferred stock. So here it says corporations generally have common stock and sometimes preferred stock. We'll talk about preferred stock a little bit later. But what I will say is that preferred, as the name implies, it's a stock that has some type of priority, right, over common stock. And the priority that they have is that their dividends will always be paid first. And if the company liquidates, they will also get paid out first before common stock. So again, preferred has some priority. And, you know, if you do own a stock, they say that you have a stock certificate. But as someone who owns stocks, I can tell you that, you know, I don't have stock certificates here at my house. Everything is electronic. You just have, you know, in your brokerage account, it shows what you own. And, you know, people believe that.
Are there different prices for the preferred stock and the common stock?
Did you say are there different prices? Is that what you just said?
Yes.
Yeah. So they will be, because, I mean, preferred stock has all these features that are kind of quote unquote better than common stock. So most of the time when it comes to issuing stock, I'm just trying to see if there's any. They don't really have a picture of that, so I'll just talk it through. Most of the time when it comes to issuing stock, the preferred stock is definitely going to be at a different price than common stock because of these additional features, like the preference when it comes to dividends and the preference when it comes to liquidation. And the preferred stock's dividend is generally a set percentage. That's why, you know, when we're talking at the start of the class about the features of the preferred stock, it's normally giving some type of a percentage for preferred stock, which indicates what dividend they're supposed to be getting. So they're two totally separate classes of stock. They're going to be treated completely differently. Is that clear?
Yes.
Other questions on preferred versus common?
No.
So common stock can vote. Remember we spoke about voting for the board of directors and all of that. Those types of things, those are what the common stockholders are. They're allowed to vote, and so on. Preferred stockholders don't vote unless they haven't been paid a dividend. Then they're allowed to vote at an annual general meeting. That's just, you know, as an aside. So the whole point again of this chapter is obviously to get into some notion of what a company is about, but a lot of it is also going to revolve around journal entries that we make for issuing stocks or for selling stock. So again, because of that, we have to be sure that we understand the terminology around that, and then also, you know, a little bit about what the balance sheet looks like, and then we'll be able to actually go in and make some journal entries. So when a company is thinking about selling stocks to the public, which again we call issuing stocks, they have to think about things like how many shares are authorized, how many shares do I want to issue, and at what price do I want to issue those shares, right? So years ago, you know, Amazon would have thought about these things when they went public, thinking about, okay, let's sell the shares to the public initially, maybe at $40 a share. We want to be able to issue 100 million shares, and, you know, that will determine how much money we actually raise. So I already said authorized is what you are allowed to sell. And in general, we would show that in the stockholders' equity section of the balance sheet. Issued is what has actually been sold to investors. So anything that hasn't been sold would be unissued. So authorized minus the issued is what's left that could still be sold to investors. When a company decides to sell their stock, they usually work with an investment bank, like a JP Morgan or, you know, Citi or whatever the investment bank side of things, Goldman Sachs, that will help them to be able to sell the stock to the public. That's not necessarily just something that the company does on its own. There was one company recently that did do it on their own, and they actually did pretty well. That was Spotify. Anybody listen to music on Spotify? Yes, no, maybe?
Yes.
Yes, okay. So Spotify went public in 2018. Unfortunately, if you had bought in at that point, because of what's happening now, so it's gone a little bit bad. But they decided to just issue the stocks themselves and not work through an investment bank. They, people were going crazy at the time thinking this was so ridiculous, but they made a success of it, because when you work with the investment bank, guess what? You got to pay them money, obviously, right? To be able to help you. So they avoided that. What is the market price of the stock? We just saw that, right? Today, Spotify's market price is 128.72. That's as of today. When they first issued the stock, it was 147.92. So market price is what's happening right now in the market. Market price, excuse me, or market value. And it's based on demand and supply. So when if I have to go now and I say, oh, I think I want to buy some stocks in Spotify, I can pay that price that I just saw, and Spotify won't have to make any journal entries on their books. Okay, that's important to know. When people are buying and selling these stocks in the market right now, that the accountants at Spotify aren't sitting and making journal entries every time a stock gets sold. The only time they made journal entries was at the initial public offering when the stocks were first sold. And after that, all these changes in prices are between people in the market, and Spotify doesn't have to account for them at all, okay, because it's in the secondary market. So that's the market price, is the price today of the stock. And then the last piece here, and then I'll take questions. This is very important, okay? Although it's a very bizarre concept, we do still need to know how it works, because it comes up all the time in the work. There's this notion of a stock having a par value or no par value, or sometimes even something called a stated value, okay? Par value refers to, or par value stock is when the company has assigned a value per share. But this value is often a very small amount. Like this is saying $1 or $2, but honestly, if you look at Amazon, their par value is a penny. You see that? It's just a penny. It can be a penny, it can be $1, it can be, anything. So now the question is, where is this coming from? It seems completely arbitrary, and to some extent it is. Basically, it's a legal concept that was created many, many years ago to try to protect investors, because companies were distributing money like as dividends, but in the end also even distributing the capital balances. So they weren't just distributing profits, they were actually distributing original investments, or using those original investments for things that they shouldn't have. And so the government came in and said, you should have a par value, which is the minimum amount of money that cannot be distributed to investors unless the company liquidates. But that concept is so old now and almost irrelevant to some extent that companies now sometimes even have no par value stocks. So in any question that we do, there may be par value, there may be no par value, or there may be a stated value, which is basically almost the same as a par value. So this is where, Jimmy, when I was talking at the start of the class, I was saying there's all these like little small things that you kind of, in this chapter, can get very dangerous, because we kind of have to keep track of terminology, and the terminology actually means something, because if a company has stocks with a par value, the journal entry that we make will look very different to if there's no par value, or if there's a stated value. So I will go through, many examples of how to account for this. I also just want to note here, and you saw this already, Amazon is trading today at about $1,900 per share, but their par value is only a penny, right, per share. So par value and market value do not mean the same thing. Par value is just a number that the company assigns to the shares. And, you know, for the most part, it's not as meaningful, but it is something that existed for many years from a legal standpoint. And so some companies still use that concept. The floor is open for questions or for me to repeat anything. And I'll also check the chat window as usual. I am messing up with the chat here. Okay, if someone's cat was pressing buttons, that's okay. Daya, you asked how much is a stock, like what percentage of a company? It depends how many stocks have been issued. So let's say only 10 stocks have been issued and I own, you know, one stock, then I'll obviously have a much bigger percentage of the company than if 1,000 stocks have been issued and I own one stock. So most of the time companies will only start even showing the names of people who own the stocks once these people have about a 5% or more ownership. And again, the percentage depends on how many stocks are issued in the first place. So you can't really say for all companies one stock is going to be, you know, 1% or something. It depends on how many stocks are out there. Kerry, are you on here? Because you said you keep getting kicked out of the call. No, Kerry's not on here. Oh boy. Okay. Can I repeat about no par value? Yes, I can. So again, par value is just a random amount that a company is assigning to each share to say, you know, that's the number that we're going to use as the minimum amount that we have to keep in that account balance. No par value is just when the company decides not to assign any minimum amount to the stock. So there is no separation between, you know, the minimum amount that we keep in the account and any other money that we raise. It doesn't matter. So this becomes more obvious when we do some examples. So I'll do a few examples with you in a short while here. Shazid, you spoke about Tesla. Did you want to see the Tesla stock price? Or were you just, oh, you were giving me names. Okay, names of companies. All right. I don't know where Tesla's trading. They were having a pretty good time recently with their stock price. Yeah, they're looking pretty hot. Tesla, I mean, they were much higher before this whole Corona business, but yeah, looking good. Okay, let me bring the chat window out so that I don't keep forgetting to answer people's questions. So this is the last thing that I'll say before we'll actually do an example, because otherwise I think we'll all kind of just lose it because I'm talking so much. But when we look at how we treat the capital, and remember capital is what the owners own, right? In the company, you've got assets. You know, that's all the stuff that the company owns or controls. You've got liabilities, which is coming from outside creditors, people who lend money to us. And then capital is the piece that belongs to the owners. So that is also owner's equity. It's just called stockholders' equity because now we actually own stocks, or sometimes called shareholders' equity or corporate capital. So stockholders' equity is broken up into two parts. It's broken up into the part that people actually paid in. So if I had bought stocks in Uber when they went public last year, that is me paying money into the company. So that would be called paid in capital. Okay, so that's, like the common stock that I'm investing in and so on, that's paid in capital. The second piece is not paid in or contributed, but earned. So this is relating to all the profits that the company is making that actually also belongs to the owners, but isn't money that the owners paid to the company. It's money that the company generated from all of its operations. So if you look at Amazon, you can see over here, there's something called retained earnings. All right, retained earnings, that's part of the earned capital. So at the moment, Amazon has all kinds of stuff going on, but they, in addition to all the other stockholders' equity accounts, which we can go into later, I just want you to see that Amazon at this time has earnings that they've kept back in the company that they haven't paid out to stockholders of how much? Can someone tell us how much this number is?
$19.6 billion.
Yeah. So between 2017, which was the previous year, 2017 they had 8.6 billion, and then they added another about 11 billion to that. So that 19.6 billion actually belongs to the stockholders, all right, because it is money that, so it's part of the capital, stockholders' equity. It's money that the company generated via profits that they have chosen not to distribute to the owners. So if you had stocks in Amazon, do you think you would want to see some of that money as a dividend?
Yes.
Yes, exactly, right? So you got to speak to Bezos about why he's sitting on all this retained earnings. So retained earnings, again, is the profit, and sometimes it's loss, but in this case, we're dealing with profit that the company has kept back in the business since the time that the company started, minus any dividends that they may have paid at some point. But in the case of Amazon, they have not paid any dividends. So their retained earnings, this is all the net income over the years from the time that they started that they've decided to keep in the company. So that's earned capital. The stuff that's paid in is over here where we bought common stock and so on. That plus this additional paid in capital, that is all paid in by investors when they bought stock, right? The retained earnings is what the company generated to increase the capital of the owners. So when the company eventually, finishes doing their income statement, and I'll show you over here, all the net income of the company. So we're back to the income statement. You see this 10 billion that they made of net income in 2018. That net income has to flow from net income into retained earnings. And that's why this number went up, by about, I think it's by about 11 billion. So there's probably other stuff going on, but it went up by about 10 billion because the net income from that year goes into retained earnings through, and this should sound somewhat familiar to you, through a closing journal entry. All right. So we close the net income, we take it out of income summary, and instead of putting it to something called partners capital or owners capital, we credit retained earnings. So retained earnings is a part of capital, and that's where the net income goes. Let me check the chat. Does anybody have questions? Nothing? All right. So let's look at some of these examples that are on the example sheet. You should be seeing an Excel sheet, not this one, sorry. I don't know why I have this open. Let me see if I have my exercises. All right. You should see a sheet like this if you haven't picked it up already from the from the Zoom call materials, please go there and do that. I'm going to just, for the sake of not causing too much confusion, for example, one, I'll work it through with you, but I'm just going to do part A that shows the closing entry for net income and hold off on the balance sheet here for a minute, because I think the balance sheet, you know, for some people might be a little bit too much to take in before we actually do some of the issuing of the stock. So let me just open a new document here. All right. Okay. So what we have here in example one is you're being asked to do the closing journal entry to transfer net income to retained earnings, basically. And if you wanted to, I'm just going to jump around for a second here. If you wanted to see where this is coming from, let me just see if I can find it for you in the textbook. I think it's actually in this part. Like after today's class, if you want to see it again, it's over here, okay? So where they talk about retained earnings, this is the example we're about to do. So hopefully that helps to give you an idea of where we're at. So Delta Robotics has net income of 130,000 and common stock of 800,000. The instructions, and again, I'm just going to do part A for now. Prepare the closing entry for net income. So when we were reading in our notes, we saw that the closing entry is going to debit income summary and credit retained earnings. Okay, so it's as simple as that. So I'm just going to do the journal entry over here. Oops. So debit credit, and this is example one, part A. So income summary is being debited for 130,000 and retained earnings is being credited for the same. So retained earnings goes up on the credit side, it's increasing. Net income is being transferred. Sorry, net income is transferred to retained earnings. So if you think back on the Amazon example, remember their retained earnings went up by about 10 billion. They would have made this journal entry to get the net income out of the income summary account, which would have summarized revenue and expenses, and transfer it into retained earnings, which again falls under our earned capital. So it's a credit balance. Questions there? Oh, you know, Debbie, you were just asking me about these notes, and I just said yes. I don't know if you were you referring to the calculations, or are you referring to the actual notes? Debbie, are you there? The actual notes are already posted under the Zoom call materials.
Okay. Yeah, like everything that's being done, like right now, like the exercises and, you know, everything.
Oh, yeah. So with the exercises, the solution, I will just put on this Spring 20 solutions. But
Yeah.
the notes for the chapter, you can take these notes, you know, because you guys may have
taking
to.
the notes here too.
Yeah.
So, but
I would put a complete solution today after the score. I'll put the entire solution for everybody, or for everything. I'll put on Blackboard under the Spring 20 solutions.
Yeah, just like how you did chapter 12. Like
yeah. Same. Mm-hmm. Yeah.
Okay.
Okay. All right, so again, I'm not going to do part B because I think we first need to talk about the balance sheet a little bit more before I do that. Notice how with the transfer of net income to retained earnings, you don't have to do anything with a common stock balance. That was just given to be able to prepare the balance sheet. So you guys go ahead now for example 2, just do example 2, part A. Just do the closing entry for net income. It shouldn't take you very long, just to make sure that you actually know what I was just talking about. And I will not show my solution, right? So for those people who were possibly sleeping, I don't blame you, but wake up now and do example 2, part A.
So, Professor, can I say the answer? Or
Not yet. Let's just give like maybe 30 seconds more and then you can say, okay, I'll call on you in just a short while, yeah. In fact, let me do the attendance while this is going on. Guys, just bear with me. I'm just doing the attendance so I don't forget. Again, remember attendance is off, not off, but like you're either here on the call and so you're present, which I encourage because this work is not easy to get through on your own. Or if you can't make the call for some reason, but you do finish the work, you would still be marked present. Just know that by April the 1st, I have to send to the school the attendance that of those who actually did come to class. So you guys are fine. But if there's anyone you know who is not attending and you know them from this class, please tell them that, if they can make it, attendance is not really optional at this time unless they're having some major technical issues, at which point they should let me know so that I can just be sure not to mark them completely absent. All right, so Jimmy, you can go ahead and tell me what you think the answer should be.
So the income summary is 122,000 to debit.
Okay, just give me a minute while I'm lazy. Yeah, so income summary 122 and
then the retained earnings is 122 in credits.
So it's just same, right? Same thing, different number. You're doing the closing entry. That's what that entails. So sometimes we have bigger, exercises or problems. And then the first, either the first or the last part of the transactions would be, it just says something like the net income for the year is, X. And then people are like, I don't know what I was supposed to do with that. And then I have to remind them that basically what the question is asking for is the closing journal entry. In fact, let me just see if I can see a question like that just quickly, just so that it can make more sense to you how this manifests in real, quote unquote, real life. Let me see. All right. It's not in this one. That's the, did I give you one like this? Maybe I didn't in this round of, well, this one's just really straightforward, right? Prepare the entry to close net income. So you would have to do that journal entry. Sometimes it's a little bit less obvious, and it just says something like net income is, you know, $1,000, and then people kind of like, now what do we do with that? So now you know that, go back here, that all you have to do is close out the net income, which means debit, income summary, and credit, retained earnings. All right, so shall we take a quick break here, maybe 10 minutes, people can just get,
Yes.
you know,
So before we take a break, can I have one more question? On the test, on the quiz, right? It's going to be exactly the same as the homework. We have to fill in the income summary part and retain.
Yeah, so let me say two things. The quizzes are normally just multiple choice questions because I'm just checking in with you that people are actually studying, you know, but the test is multiple choice questions and exercises. And so the exercise part of the test is going to look like the homework, yes. So you have to fill out stuff and you have to make sure that you know how to navigate Wiley and so on. Is that answering your question?
Yes, that's what I need practice on, because I had to go back to the textbook to find the order that it's supposed to be in and then put in the numbers.
Yeah, I mean, I have to check if I can't remember if I gave even a full balance sheet completely in the test, because it takes time to do that. I will, a week or more before the test is even going live, I normally give a prep sheet that tells you guys which exercises are going to come so that you would know how to handle it.
Perfect, thank you.
Yeah, so you know, then that's the warning, like, oh no, we will have a balance sheet or we won't. But I don't recall that I gave a balance sheet a full balance sheet in the tests in Wiley. And the reason is, when I do the manual test in a class, I give you a balance sheet, but I give you a template. So in Wiley, I can't do that. And I don't think it's fair that people have to memorize a whole balance sheet, because when you're working in the real world, you will never have to memorize a whole balance sheet. There will always be a previous year's balance sheet to refer to. Do you understand? So when you are working through the exercise for the balance sheet, yes, I want you to know the different names in the sense that at least you understand what a balance sheet consists of. But for the most part, the emphasis is on knowing how to calculate the balances relating to those accounts. Does that make sense?
Yes, but that's the same thing. Once I got the order of the listing of it, then I was able to calculate better. And now I was just guessing, trying to put in both. I was like, that's what I...
Yeah. And I don't, my aim when I teach this class is to decrease guessing and to increase understanding. So I try to set the tests in a way that will show me how you think, and not necessarily that you can copy one thing from another thing or whatever, because that isn't really what I'm after. I need to know that people actually understand how to do the work, as opposed to just regurgitating something for me. All right, so let's take a break here. We'll start back at noon, at which point we'll start with accounting for issues of common stock, and I'll show you how to do those journal entries. If people have questions during the break, you just put them in the chat window and I will deal with them, all right? So I'll see you back here at 12 noon. Take a quick break. Okay. When a company, so I'll just repeat this. When a company's deciding to sell the shares, they need to look at how much they want to sell the shares for, how many shares they want to sell, and what is the par value of those shares. It's also possible that the shares might have no par value or a stated value, but for now, you know, we're just using number 2, saying a par value, but it could be no par value or stated value. And so they have to make a journal entry for that. And of course, when we sell something, we're getting cash in return. So we will debit cash, and this looks a little bit confusing, but I'll explain it to you. You're debiting cash. How much is going into cash? It's the price that you are selling the stock for multiplied by the number of shares, and stock and shares means the same thing, the number of shares that you are selling. So again, cash goes up by the price that you are selling the shares for, multiplied by the number of shares that you are actually selling. That's a debit because cash is an asset, so the asset goes up on the debit side. What you're selling is going to give these people ownership, right, in the company. So the capital account, common stock, has to increase. Remember, capital accounts increase on the credit side. So how do you know how much goes into common stock? It's going to be the par value or the stated value multiplied by the number of shares that are being issued. And then there's one more piece over here. If the cash that you receive is more than the par or stated value, you also have to include an account called paid in capital in excess of par value. And this gets a little bit confusing here. So I'm going to do some examples so that you can see what these words mean, because I'm sure by now I may have lost a few people, and that's okay. Remember, I said there's a lot of small things to remember in this chapter, but the more examples we do, the easier it becomes to remember how these things affect each other. So let us go to example number 3 and actually try to begin to apply what we're learning. And I'll jump between the example and the, you know, the theory over here so that you can understand where these numbers are coming from. So this piece over here is where we're issuing specifically par value stock, okay? Specifically par value. There will come a time later on when we'll do no par value, but for now we're just focusing on par value. So in example 3, here we go. On July the 20th, 2018, Reyes Inc. issues 1 million. $2 par value. So there's your par value. Remember, we had to look at 3 things, right? The number of shares, the par value of the shares. So it's common stock at an issue price. And it so happens that the issue price and the par value are the same. Okay, this isn't always the case, but in this example, just to make it a little bit easier so that we can first see how the numbers work, we have the same par value as the issue price. Prepare the journal entry required for the issue of the shares. And then it also asks us to prepare the relevant T accounts. So this is like posting to the ledger. So now let's see if we can figure this out, right? Based on, and where are my notes now? Okay, based on what we just said, if we have a journal entry for a par value stock, we have to debit cash, we have to credit common stock, and maybe we also have to credit paid in capital. We'll see. So I'm going to go here and write example 3. Stop me at any time if there are questions. Let me also just see if anybody's looking for me in the chat. Not anything for now. Okay. So we want to make a journal entry, so we need some debits and credits, right? When the company sells the shares, they are going to receive cash. How much cash will they receive? It's the number of shares multiplied by the issue price, okay? How much you are selling multiplied by what you are selling it for. So our cash goes up, and it's 1 million shares multiplied by $2 per share. So it's going to be obviously 2 million, but I'll just write it down. Question? I had someone talking.
Can you please repeat that step?
Yes, I can. Looking at the question, right? You know that you're going to get cash. Do you agree with me? You're going to get some amount of cash from
Yes.
the public, okay? The question then becomes, how much cash are you going to get? Well, you're selling them 1 million shares. So it's 1 million multiplied by whatever price you're selling it at. In this case, you're selling it at $2 per share. So the amount of cash that you're receiving is 2 million.
Got it.
Is that better? Okay. So cash goes up by 2 million because that's what we are receiving from whomever we are selling these shares to. So obviously this journal entry is not done yet because we still have to account for the fact that these people now have capital in the business, and that capital is called common stock. So, sorry, common stock. And so their capital account goes up, capital goes up on the credit side. And if we look at how we're supposed to treat it, we are told that the common stock is credited with the par value multiplied by the number of shares. Right at the beginning of this call, Jimmy was asking me, are there shortcuts or rules or things like that? These are the rules that I was referring to. When you issue stock, your cash is always going to increase by the issue price, the selling price, multiplied by the number of shares. Your common stock, if there is a par value, you're going to say par value times the number of shares. That's going to be the same thing every time. So for common stock, the number of shares is also 1 million. So it's 1 million shares. I'm just giving myself a little bit more space. Multiplied by, so now, yeah, just be careful, okay? It's also $2, but it's a $2 par value. That's what I'm multiplying by. I'm not and yeah, this $2 over here was a $2 issue price, okay? So it looks like the same amount, but it's for two different reasons. The par value and the issue price are both $2. When we do further examples, we will see that, that the cash and the common stock amount are not always the same. Questions on that example? The common stock, yes. Yeah, so credit, common stock, debit, cash. No questions? I don't believe it. We're done, okay. So we want to make T accounts, right? So I'm just going to make them over here because the second part of the question says to make T accounts for our you know what, this isn't going to work out so well. Let me try and do it somewhere else. Okay, it's better over here. So I'm going to make a T account for cash. This is just like I'm posting now, right? Posting to the ledger. So cash needs a T account. So here's my cash. Remember, the T account is like a ledger. It's going to be the same. So it's up on the debit, right? Cash is an asset, down on the credit. So all you're doing is copying and pasting, right? So cash is just going to go up by 2 million and that's it. And there'll be a balance of 2 million. But I mean, even showing the balance is a little bit almost unnecessary because there's nothing else in the account. So that's the cash T account, as simple as that. Questions on the T account? So why don't you guys go ahead and try to do the T account for common stock? Quickly, I'll give you, 90 seconds.
The answer is it's just the opposite. Everything's on the
Yeah,
credit.
it's kind of, it's just copy paste, right? So it's pretty
My actual
simple.
question,
Yes.
when you add, when you're doing the cash and common stock, when is the third thing? When you're doing the paid, what is it? The same as
Oh,
the
we're gonna
whole.
come to it. We're gonna come to it. What's the question? Let me see if I need to answer it now or later.
I just want to understand the process better. So when
Okay,
I'm
I'm
looking at
coming to it now. Sit tight, I'm coming. So yeah, again, you're copying and pasting. So the 2 million goes on the credit side. Again, it's like we're posting to the ledger, right? But we're just using T accounts. And then the balance is also 2 million. That's it. Okay, that's the relevant T accounts that they were asking for in the question. Anybody have a question on the T accounts or posting from the journal to the ledger, which in this case is represented by T accounts?
is this going to be on the quiz too? We have to do the relevant T accounts or no?
I mean, remember I said the quiz is a multiple choice situation, so they can't, I mean, there might be a T account in the question and you have to choose an answer, but you can't do a T account in the quiz. Could you do a T account or a 3-column ledger in the test? Absolutely. Right, that's part of what we're doing here, for sure. And maybe to that point, let me just show you what and people may, some people said they forgot everything from accounting 1, so I kind of have to operate on the idea that people don't remember stuff. But there's also something called a 3-column ledger that you could post to. So it's basically a general ledger. So the T account is, the T account is just, a T, but the 3-column ledger is a little bit different. You have date, then you have, an explanation of some sort. Then this is why it's called 3-column. You have debit, you have credit, and then you have balance, right? That's how it's set up. So now someone who's, maybe you don't know what I'm talking about here, I'm saying that if a question could ask you to post to the ledger, either by using a T account like this or by using a 3-column ledger. So let's just say, let's just say this is cash in a 3-column ledger now. What I'm trying to show is how the same question, posting the same answer would translate to a 3-column ledger. The date was July the 20th. So I just put the date, explanation. You don't have to put anything. Okay, explanation is usually saved for when there was an error or something like that. You debited cash in the journal. So you're going to debit cash in the ledger. So all you're going to say is 2 million debit. You do nothing in the credit, and the balance is also 2 million. That's a 3-column ledger approach to the same problem. Does anybody need me to show the common stock 3-column ledger?
No.
Okay, just checking that no one is asking me for that. So that's the 3-column ledger for cash. The common stock would look the same, except that the balance would go on credit and balance, right? Okay, so that's example 3. Now let's move on to example 4, where there's a difference between the par value amount and the issue price, right? So now things get a little bit more interesting. Or, interesting for me, maybe not as much for you. I just want to reiterate that this chapter has a lot of small concepts that are floating around, and your best bet is to be as systematic as possible with how you approach these questions, to try to understand what each number means, and not just trying to grab numbers and punch them into a journal entry, because you may get it right, you may not, but it makes life a lot more confusing for you. And that's part of why I'm trying to go as slow as possible to explain what each number is. I know for those of you who got it already, you it might be frustrating because we're going so slowly, but the purpose is to make sure that people understand which numbers you need to look at in order to successfully complete these journal entries. So in example 4, on October the 12th, 2018, Wright Inc. issues, so they sold 150,000, that's the number of shares. $1 par value is obviously the par value, which is another number we look for, of common stock, that's the type of shares. So 150,000 shares of common stock at a $1 par value, and the issue price is $3.50. So $3.50 is what the company actually will be receiving from the public. $1 is the value that they assign to each of the shares. So prepare the journal entry required for the issuance of the shares and prepare the relevant T accounts. So now this journal entry is going to look slightly different from the previous one, because in the previous one, you had an issue price and a par value exactly the same. Whereas here, you've got an issue price and a par value that are $2.50 different from each other. So that extra money has to go somewhere. And where it goes is an account called paid in capital in excess of par value. So I will demonstrate the question, or the answer, I should say, now. So this is example 4. And again, if you're panicking that you can't keep up with writing all this stuff down, I will put the whole solution for everything to do with this chapter under the solutions tab when we're done here today. So where do we start? Start with the easy stuff, which is cash, right? So cash is a fact. We know that we are selling 150,000 shares. And at what price are we selling them?
$3.50.
$3.50, right? $3, that's the issue price. Remember, we said when you look at the theory, cash is the issue price times the number of shares. So I'm just following the rules that have been set out for us. So it's 150,000 shares multiplied by $3.50. So 525,000 is the amount of cash that the company is receiving from this transaction. Now we go back and remind ourselves that people are paying in money, so they also have to receive, or not receive, but their capital account has to go up by some amount. One part of that is the common stock. So see how this becomes repetitive, right? We're going to credit common stock again with 150,000 shares, but not with 350, because the rules tell us that common stock is going to be the par or stated value times the number of shares, not the issue price. So par value times the number of shares. So if we go back to the question, we see that the par value was in fact $1. So we have multiplied the 150,000 by the $1 par value. So obviously that's just going to be 150,000. Now we have a problem because it's clear that the journal entry doesn't balance. We are off by 375,000. What this tells us is that the owners who bought shares paid more, right? They overpaid for the stocks. They paid more than the par value because they obviously, well, the company decided that the stock was worth more than just par value. So we paid 375,000 extra. This money still belongs to us as paid in capital, right? So it's additional paid in capital. And the way we call it, and you'll see this in the textbook, is paid in capital, in excess of par value. And how do you calculate that number? You can just, what we would normally call plug or, derive the number, but there is also, you can use the formula. Obviously, 350 was the issue price, $1 is the par, and multiply by 150,000. You got $2.50 extra. And so $2.50 extra multiplied by 150,000 is 375,000. If you're confused about how to get to that, all you have to do is subtract the common stock from the cash and you'll still get to the correct number. There has to be at least one question here, guys. Let me check the chat.
Can you repeat that that last part you said?
Yeah. So you're okay with the cash, right? You're okay with the common
Okay.
stock. Yeah?
Yeah.
Yes or no? Yeah. So do you
Yes.
notice that the issue price is obviously higher, right, than the par, and it's higher specifically by $2.50. So
Mm-hmm.
I'm issuing 150,000 shares, and people are paying extra for these shares by $2.50. So to calculate this number, I can either go like this, right? Let's take this number away and say, how will we balance this journal entry? Oh, we know the debits are bigger than the credits. So we say 525 minus 150,000. So 375 is our balancing number. That's one way to do it. So you're just plugging the number. Or if you want to be a little bit more sophisticated, it's not necessary, but you can say, I got $2.50 extra, right? Money on 150,000 shares. So it must mean that the extra piece is 375,000. And the name of that account is paid in capital in excess of par value.
Okay.
More questions? Thanks for asking that, because it's a tricky business, yeah.
Miss, I have a question actually. Remember earlier when you were showing us a 3-column ledger, general ledger?
Yeah.
Remember you mentioned that if we wanted to see, I believe it was the common stock ledger. I'm not sure if it was that one. I would like to see an example of it, only because I want to like better understand it, you know?
Okay, so you're sending me back, Debbie, is that right?
Yeah.
It's okay. No worries. I'm going to do it here quickly, because the rule when I'm teaching is if one person's asking for something, then there were probably other people who wanted it as well, but they were shy, right? So I'm going to do it. So we did the cash 3-column ledger. You're good with that one, right, Debbie?
Yeah.
So I'm literally just going to copy over these columns, because in a 3-column ledger, the columns are always the same. All right.
This part you're going over is question 3.
Sorry. Yes. Thank you.
Okay.
Whoever's asking that. Thank you for reminding me to repeat where we are at. So Debbie's asking us to go back to example 3.
Okay.
And just do the 3-column ledger for common stock, because, I guess upon reflection, she just wants to make sure that she understands how it works.
Got it.
Got it? Okay. So same columns, date, explanation, debit, credit, balance, right? The date is the same, July the 20th. Again, I'll repeat that explanation is not needed unless it's a closing entry or there's some type of error, but most of the time you just leave it blank. So notice that when we did the journal entry, we were crediting common stock. Remember, a ledger or a T account, copy paste, okay? If it was a credit in the journal, it's a credit in the ledger. So you're literally just going down here. You're saying 2 million credit, and the balance is also 2 million. That's it.
Oh, okay, I see.
Don't worry about these open columns. They should stay open. You can't debit and credit the same account, because then you're eliminating the transaction, okay? One part of the journal entry goes to one account and the other part goes to another account.
Okay.
Okay?
Yeah.
Thank you for asking. And for those people who I was now away from this answer because I went back up, please complete, if you need to, taking down this solution. And if you still have a question about this example, please ask me now. Just checking the chat window.
Professor.
Yes.
So after you put paid in capital and the excess par value, that's it. That's it for that portion. So I see underneath
we're
you
done.
have. Okay.
Yeah, you see I
Do you
have
need
what,
to
sorry?
put that bottom part that you did, or no?
No, this is me just showing you guys how I even got to that number.
Okay.
You don't have to,
Okay,
in
got
your journal entries when you're doing the homework and stuff, I mean,
doesn't
you
go
can do
there.
your
That was
rough
just you showing
calculations
us.
on the side, but at no time are you obligated to show the calculations in Wiley, because in fact there won't be space to do that.
Got it.
And just to always close the loop on the, hopefully I didn't get timed out of Wiley now. Yeah, to close the loop on where the stuff is. I mean, you guys can watch this video obviously as many times as you want, but you can also go into, do you see accounting for stock transactions? The stuff is all, yeah, all right. And I mean, we left out hyphen common stock because they only have common stock, but if a company has more than one type of stock, you'll differentiate between common stock and preferred stock paid in capital in excess of par. So again, this says common stock because they're just trying to show that this account belongs to common stock. But most of the time when companies only have one type of stock, they don't have to do that differentiation. So if you get stuck again at some point, you can also read in the textbook. It's doing the same example, not like exactly the same numbers, but doing the same types of examples that we are doing together right now. All right, so let's have you guys do example 5. Don't do B yet. I'm still just holding off on the balance sheet for now. Just do A, where you're doing the also the issuance of the shares. And oh, you know what? Sorry, I'm jumping the gun. I was supposed to do the relevant T accounts for example 4. Let me do the T accounts for you guys, and then I'll have you do example A, and then example 5A, and then we'll probably be out of time. I know that this is pretty maybe repetitive, but let's just do the T accounts again. For example 4, right now I'm doing the T accounts. So we need to have cash. And so it's the same idea. You're just putting your copy and paste, right? Where there was a debit in the journal, there's a debit in the ledger. There's nothing else that impacts cash. So you can rule a line, and the balance on cash is the same, 525,000. That's it. Now here's the T account for common stock. Common stock is a capital account, so we're not going to hit the debit side, we're going to hit the credit side, and we credited 150,000 in the journal, so we do the same in the ledger. There's nothing else to include, so the balance will also be 150,000. And so now the last account, and this is new now, right? Because we didn't have this account before, is going to be paid in capital in excess of par. And if you want to be really specific, you're saying belonging to common stock, very long name. So let me do this so you can see it. And if you go up, you see that we credited it with 375,000. So there's a credit 375, copy paste. There's nothing else to go into there. So balance is the same. Please ask questions, or if I need to repeat any part of the T account. T accounts, plural. Are you guys good with this?
Yes.
For the most part?
Yes.
Yes.
Let me see if anybody is complaining that I need to. Okay. So
I have a
someone,
question.
yes, what's your question?
Is it
Go ahead.
is it necessary to put the 3-tier accounts?
What would the alternative be? What are you proposing?
The tier accounts, you said that we have to put cash, the common stock, and the
Yeah.
paid in capital.
So they're asking for all the relevant T accounts. So each account has to have its own separate, because the T account is like a ledger here. So every account would have a separate general ledger account. You can't, I don't know if I'm understanding you correctly, but are you asking me if you can somehow combine them into one?
Yeah.
No, you can't. You can't. So unlike thank you for asking that. It's an important question, okay? So unlike a journal entry where everybody goes together, right? And we have to balance debits and credits. When we post to the ledger, and in this case, the T account is, you know, a representation of a ledger. In a ledger, by definition, the rule is that a ledger, each account is separate.
I see. All right.
Yeah, so you got to pull the numbers from the journal entry into every separate ledger account.
I got you.
Got you. Okay, so now let me challenge you guys to make a 3-column ledger for common stock. Make a 3-column ledger. Remember 3-column ledger? I'm not going to show you now the answer because we did it before. So make a 3-column ledger for common stock, please.
Professor, is the date
Oh, you
necessary?
want me to tell you the date? October the 12th.
Okay, thank you.
Can I give the answer?
Not yet. Let's sweat a little bit more here quickly. I just want to make sure that I captured everybody who's actually on this call in the attendance. Oh, Kenya, I didn't see you earlier. Go here.
I was here the entire time.
Yeah, I'm sure you were. For some reason, I just didn't see you on the list.
Got it.
Thanks for confirming. Moshe is not here, right? David? Nope. Jetson? No. Freewet? No. Armelina? Yunji? Tyrese? Ying Chao? Juho. Okay, I have everybody who's actually here. Sorry, I didn't. Is someone talking to me? I can't hear you properly. Hello? Am I hearing voices? Okay. Okay, so let's go with the answer. Was it Jimmy? You said you wanted to.
Yes. So
Let me just hang on. Let me set myself up here. Let me just copy this thing. Otherwise, it's going to take me for
explanation, debit, credit, and balance.
And at the top is common stock. The date was, what did I say? October the 12th or something? I can't remember. Okay. Yeah, October the 12th. Go for it.
And then 150 for the credit and 150 for the balance.
That's it. As simple as that. And if we had more dates, guys, if you had more transactions for other dates, you would just keep adding on. So this is all you need for our solution. Hopefully everybody has the same, but I'm just going to pretend, okay? So let's just pretend that we also had another transaction on November the 1st, and it was for 200,000. So it goes on the credit side. What does the balance become?
350.
Balance becomes 350,000. Sorry, and so on. So
you do have to take off the 150 on the balance, right? That doesn't belong there anymore, right? Or
no,
still
you don't take it off, because on October the 12th, the balance was in fact 150.
So you're just
Yeah,
so you're just adding it.
you just keep adding or subtracting depending on what's happening.
But you still
Okay.
have to pick up that spot.
You keep that balance. It's like if you looked at your bank account and you said to yourself, I want to know what my bank account balance was on February the 7th, right? Then the bank has to be able to show you that. They can't remove that balance because the number changed the next day or something like that. You know what I'm saying? So
Understood.
the balance remains, and it's rare. I don't think we will have a debit to common stock in our example, but I just want to show you. Let's just say on December the 2nd, something crazy happens and we suddenly have a 50,000 debit. Maybe we made a mistake or something. So this would now, so the credit was always a plus. You're adding the stuff together. The debit is going to be a minus. So what happens now is you say 350 minus 50, and it becomes 300. So I'm pretending that these journal entries are happening. So what does this tell us? That debit is a minus and credit is a plus. The same, the same as before. Okay, debit is the negative and credit is the positive for a capital account. Any other questions there?
Oh.
All right, so let me see, let me check my chat window. No one's looking for me there. All right, so I was going to say we could do example 5, but it's very similar to the one we just did. So I'm gonna let that go because we're basically almost out of time and I don't want to keep you over time. I know you guys have a lot of stuff going on. So what I will say though is, as stated before, I will put up the solutions, the full solution for each example on Blackboard under the Solutions tab. I also just want to remind you, I said this at the beginning, saying it again, that on the due dates and assignments tab on Blackboard, I changed all the dates to be more in line with, you know, our timing right now for the semester. And I have to still change all the dates in Wiley. So don't panic when you go into Wiley and you see that things are not due on the same date. I haven't done all of that yet. And the quizzes and tests will open about a week before they are due, and you have a whole week in which to find the time to sit down and do the quiz and the test. I will add, because some people, I mean, the whole world is on the internet now. I mean, I should say the whole country. Let me not be like exaggerate too much, but the whole country is working from home. Well, most people except for our first responders and so on. So I know that some people may be having internet difficulties with the internet being really slow. So I said this before, but I'll say it again. The test is written for 2 hours. I normally give 3 hours just because people have to, you know, navigate through Wiley, and it gets sometimes a little bit difficult, you know, because of going back and forth between questions. So I will add another hour because of the internet slowness to the test. So you will have a test that is written to take 2 hours, but you will have 4 hours to complete it. But remember, once you start, you cannot go out and come back in. You have to finish it in one shot. Okay, it's a timed assignment. The homework is different. The homework, you can go in, you can do a question, you can save it, you can come back out, you can come and go as you please. But the quiz and the test are timed. So you'll have to find, a time when you know that you won't be disturbed by anyone and that you'll be able to sit and do the work. Know that I do have the ability to go in. If someone got kicked out of the test by accident or something, I do have the ability to go back in and reset it for you. So don't think that all is lost. Please contact me if you're having problems. And the last thing I'll say about the homework is, remember your homework questions, you need to actually submit them so that they can count. If you just do the question and you never click submit, then when the homework is due, it will look like you never did anything. So please remember to click submit, and you have multiple submission attempts. So even if you click submit after your first attempt, at least you've recorded what you've done up to that point, and you don't have to start from scratch. Like I said, on Monday, I have had people who thought they finished the whole thing, but they never clicked submit on anything, and then ended up losing all of their work, and then had to redo everything all over again, which no one has time for that. Any last questions or comments before we hang up here?
Can we review some problems relating to the homework? I wanted to just double check the problem 13 dash is.
I think that if you have a question specifically, because everybody is not, some people haven't even started that homework, so you can hold on for me and I can let people go. But there were also other people that were actually ahead of you in the line who still need help with chapter 12.
Oh.
So I'm just trying, look, today I don't have office hours, but I'm trying to just hang on for a few minutes. I think the chapter 12 people would be more urgent because that thing is due tonight at 11:59. So what do you suggest might be a good way to do it? Do you want to send me a screenshot, or do you want to just sit tight and wait? I don't know.
No, I'll do the screenshot. It'll be more convenient so you could I don't want to hinder you and everything. So at least
yeah, I mean, no one's hindering me. It's more just that, it's mission critical now for the people who haven't finished chapter 12, and you and I can still talk because you still have until April the 6th. Not that we need to only talk by then, but I'm saying we still have a little bit more time. So send me the screenshot. If there's some flexibility in my schedule and yours, we can even hop onto a call to just talk it through. All right?
Yes, no problem. Thank you.
Okay, dokes. So the people who need to, other people who maybe still have something lingering about chapter 12, there's at least one or two of you who already said that you need help. You can stay on and just let's see how deep the problem goes, because it may not be something that is quick. And everybody else, you're free to go on with the rest of your day. Thanks for joining the call. As soon as Zoom sends me the link that the processing of the call, of the recording is done, I will render it into YouTube, and then it will be available on YouTube. And I'll also, like I said, I'll put up the solutions for all of chapter 13's work on Blackboard. All right. Stay safe and contact me if you have questions.
Thank you, Professor. Have a nice day.
You too. Bye.
Thank you.
Bye.
Bye. Thank you, Professor.
I
Bye.
Thank you, Professor. Take care.
Bye.
Bye.
Take care, everybody. Have a great week.
Bye.
Stay safe.
Hello, Professor.
Hi, Jennifer.
And so I think I'll probably be done by tonight, but I was just curious to figure out which, it was a chapter in for accounting 1, there was a chapter where I can refer back to the different accounts. I think that's what I'm having a problem with, matching up the accounts, making sure they're right. For example, have property, if you have property, that would match up with the, maybe sure
Would it be helpful if I go into the chapter 12 questions and I'm sharing my screen? Can you see my screen?
Yes.
Maybe we can talk about specifically where your problem was. Just questions and maybe you'll recognize it.
I've definitely got stuck on question 3.
3, exercise 1204. Okay.
Yes.
This one?
Yes.
All right. So do you want me to walk you through this question quickly?
Oh, yes, please.
Okay. I don't know if your numbers are the same. I can't remember. I think that everybody has the same numbers, but I said this long ago, so, just bear with me. If the numbers aren't exactly the same, the process is the same. Okay. Okay, so McGill and Smythe have capital balances on January the 1st of $55,000 and $47,000 respectively. The partnership income sharing agreement provides for annual salaries of $15,000 for McGill and $13,000 for Smythe, interest at 11% on beginning capital balances, and number 3 is remaining income or loss to be shared 70%, 30%, right? So McGill gets 70% and Smythe gets 30%. So what we have to remember immediately when we see this is that every partner has to be allocated their salary and they have to be allocated the interest regardless of whether there's enough money for that to actually happen. And then if there is enough money, the remainder will be split 70-30. If there isn't enough money for some reason, they may have to give back. So now it tells us to prepare a schedule showing the distribution of the net income, assuming that the net income is $67,000. And remember that if there's any negatives, you have to put a minus sign in front of the numbers. So the first thing to do here is to allocate salaries. So, McGill gets their 15, Smythe gets 13. So at that point, you've allocated 28,000, all right? Which means you still have some money left, which is great. Then you have to give them each 11% interest on their beginning balances. So McGill has a 55,000 beginning balance. If you multiply that by 11%, that means that McGill gets interest of $6,050.
Okay.
Still with me?
Yes.
And then Smythe needs to get 11% on 47,000. So Smythe, 47,000 times 11%, 5,170 of interest.
Okay.
Together, those two amounts mean that you allocated an additional 11,220. All right?
Okay.
So at this point, McGill is standing at total 21,050 allocated. Smythe is standing at 18,170 allocated, and the total allocated out of the 67,000 is 39,220.
Okay.
Which then must mean that there is in fact a remainder, right? Because 67 is obviously bigger than 39.
Yes.
So there's still $27,780 that has to be allocated between the two partners.
Okay.
And that number is going to be allocated 70% to McGill and 30% to Smythe. So again, 67,000 minus the 39,220 leaves you with 27,780 still to be allocated at 70% and 30%. So in the end, McGill gets 19,446, which is the remainder times 70%, and Smythe gets 8,334.
Okay.
Together, that adds up to 27,780, and that plus the 39 from before gets you to 67,000. The total allocation always has to add back to the amount of net income that you started with.
Oh, okay.
And then this total over here is just going to be the salaries and interest amount plus the remainder that was allocated, gives you a total of 40,496 and 26,504 respectively.
Okay.
Right? Now, in the next one, you can already see there's going to be problems, right? Because they only have 23,000 of net income.
Which is less.
Yes, but yet the rules state that you have to still allocate everybody their salary. You have to still allocate everybody their interest. So these numbers are exactly the same. All right, you see how they're exactly the same?
Mm-hmm.
By the time you finish allocating the salary and the interest, you've actually ended up allocating more than your net income.
So that's why it's negative.
Yeah, so you've allocated 16,222 much. So they have to give back that money, but they give it back in the ratio 70%, 30%. And you have to put a minus because there was a deficiency, so that amount has to be subtracted so that you can end up back at 23,000.
Okay. Okay.
Is that clear?
Yes. Now the last one is just plugging in the numbers.
You gotta plug it. You gotta plug it, and your journal entry is the same every time. You debit income summary for the total amount of net income, and you credit each partner for their balance on the total line. Okay. So yeah, McGill gets 40,496, and Smythe gets 26,504. That's related directly back to these numbers. And then on the second one, the 23,000, McGill only gets 9,696 and Smythe gets 13,304, and that's the total division as well.
Okay.
All right.
Yes.
So
all right.
You may have more questions, but Kenza also asked me for number 6. So she's holding on. Let me do number 6, and then if you, Jennifer, if you have another question, I'm still here, okay?
Well, thank you.
Okay. So Kenza, am I right? Number 6, right?
Yeah, number 6.
Okay. So shall I just walk it through for you, or is there a specific part of it that you had an issue with?
Yeah, I think part B and D.
Okay, so I'll just walk it through because it's basically that B is going to come and D is going to come from the start. So the Juja, whatever the name is, a company at December 31 has cash of 50,000, so that cash stays there. That's not going to be obviously sold. We sell the non-cash assets. So the non-cash assets of 250,000. They don't split it into the types of assets, so you just treat that as one account. Liabilities of 138,000 and the following balances. These are the partners' beginning capital balances. Zhu has 112,000 and Zirco has 50,000. The firm is liquidated. They received 265,000 in cash for all of the non-cash assets. And then Zhu and Zirco have income ratios of 60% to Zhu and 40% to Zirco. So we follow these steps as we said in class, right? In the previous class, you have to follow these steps in the order in which they are listed. So the first thing is that you sell the non-cash assets. So you receive 265,000 cash, so you debit cash. You credit the non-cash assets because you are getting rid of these assets, so the balances have to go down to 0. Because you received 265,000 cash for something that was worth 250 on your books, you make a gain of 15,000, right? And now B, Kenza, was where you said you had an issue, correct?
Yeah. The capital.
How do we get these numbers? Is that what you're asking?
Yeah.
Yeah, sure. So you bring in the 15,000 as a debit because you're trying to get rid of this account, and then you have to split it to the partners. The way you split it is Zhu has to get 60%. So if you calculate 60% of 15,000, it's going to give you 9,000.
Oh, all right.
And 40% of 15,000 is going to give you 6,000. So the rule there with the allocation of the gain is that it has to be in the same ratio as the income ratios.
Okay.
right? That's what we spoke about in class also. So hopefully does that make more sense now?
Yeah, it does.
Okay. And then the liability is a very straightforward journal entry. You debit the liability balance because it has to go down on the debit side, and you're paying it in cash, 138,000. Okay. And then with D, your question is, hey, how did we get to this number? Remember, Zhu started with 112,000. Do you agree?
Okay, yeah.
That's a credit balance. To that, you are adding 9,000. That's the only thing that changes in that account. 9,000 plus 112,000 is going to give you 121,000.
Okay, got that.
And Zirkle, sorry, I don't know why I'm having such trouble with these names. 50,000 start balance plus the 6,000 that was given to them gives you 56,000. Why are these being debited? Because remember, this is where we are paying out the balances to the partners. So you're debiting capital and you're crediting cash.
Okay.
All right?
Yeah. Thank you.
Anybody else? Jennifer, are you solid here? What's the deal? Or anybody else who's on?
Yes. My last question was, I was looking in the Wiley app because I need practice. Is there a way to just do the assignments over and over for that?
Do you mean these assignments that we're doing now, or you just mean anything?
Yeah, most likely because I want to keep reviewing chapter 12. I'm not confident about it, but will it be accessible to like a practice?
Yeah, so I mean, there are a few ways that you can do it. I didn't set up like a separate practice where I just assigned all the questions. But what you do have, and I'll go to a student view, you have a few options. First of all, I'm assuming you did some reading or whatever already, but if you want to do more, when you click under the student view, reading and review, there are videos where they work through stuff to show you how to calculate the numbers. That's one option. Otherwise, you can literally go and do some of these end of the chapter homeworks, and if that's something that people want to do, then I'm happy to put up the solutions to all the questions under the solution tab. Is that something that you might think you may want to do?
So you said I'll go to solution tab and it should be.
Well, no, I'm saying if you feel like you want to do extra questions, so at the end of the chapter, look here where I'm looking, right? At the end of every chapter, there are exercises and things that you can do, basically like homework questions additional questions that you can do. So it would normally be like problems and exercises. So I can put, because I have access to the solutions for all of this stuff, I can put those solutions for chapter 12 up on, or any chapter really, up on Blackboard, the full solution if you want to practice more questions. Yeah. What I will say is that for today, you should focus on trying to wrap up your homework, right, for chapter 12 since it's due today. And then remember that chapter 12 is not going to be in the final exam. So, just be careful about the time that you invest. I'm not saying you shouldn't invest time to get your homework done, but I would say that focus on moving forward, make sure you focus on the things that are going to end up also in the final.
Okay, perfect.
Because the next test is 13 and 14 only. 12 is basically done after you finish this homework.
Oh, all right. Thank you.
You're good? All right.
Yeah, bye-bye.
Bye. Anybody else needs anything, or are we okay to end this meeting?
No, I don't need any help. Thank you.
Okay,
Bye.
You're welcome. Bye. Jimmy, are you good? Or do you want to ask me about chapter 13 quickly, or what?
No, it's just the same thing. Sometimes, like I told you in the email, every time I read it, when I process it out to categorize it, I always mess up there. That's
okay.
I gotta get used to reading it and then putting it out to practice how to do it. That's the thing, because when I miss one step, I lose everything. So I
So
just,
how do you think, from, how you learn? So I mean, I can give advice, but I would be curious to know what you think. Like, how do you think you might best avoid this issue? Do you think it's just extra practice?
yeah, I think it's just
Okay.
practice for me to look at it.
So then what I'm going to do is the same like what I was telling Jennifer now, that I will just put up the back, basically it's like the back of the textbook homework that you would normally see. I'll just put up all the solutions. I mean, the publishers don't like when we do this because they're kind of like, the students shouldn't have all the solutions. But I think what you guys are saying, both you and her, is that you need more practice. And so it would be helpful if you could actually just go and find questions yourself where you just practice more. And then if you have the solutions, it will actually help you.
And I can compare what I did wrong.
Yeah, I get it. So because we're in these extreme circumstances now where, we can't do like tons more practicing in class, or I can see people all the time for office hours, I'll just make a concession now that I'm going to try and support you guys by giving you more solutions, and then you can decide how how many extra examples you want to do.
For us.
Hey?
I mean, once you do that, and then when we still don't get it, even though we have the solution, then we can.
Then you really know that you don't get it, and then you can refer back to me to figure out why you're not getting it. Yeah.
Perfect.
Okay.
Thank you so much.
Okay.
Have a great week.
Talk to you on Monday. Okay, bye.